If we can call our study committee, House Study Committee together this morning. At this time, I'm going to ask Chair Lady Taylor if she would give our invocation.
Thank you, Mr. Chairman. Please bow your head. Good morning, Father. Thank you for bringing us together today to work for the people of the state of Georgia. Please give us the wisdom and discernment to make the decisions that are best for our state. We ask these things in Christ's name. Amen.
Thank you. Thank you. At this time, would the members of the committee like to reintroduce themselves or say a few words? We have a few minutes, so we can start with Representative Douglas, if you'd like.
Start on this end again. Okay. How you doing? Representative Douglas, District 78. I've been here for a few years. I think I'm the lowest tenure. No, not quite the lowest tenure on the map up here. But it's a pleasure serving on this committee, and I look forward to doing something great for the state of Georgia, my constituents, and yours also. Thank you.
Thank you. Chair Lady Taylor.
I'm Darlene Taylor. I represent District 173. I'm from Thomasville, Georgia. I serve on a number of committees. I do chair the Appropriations Subcommittee on Health, and I look forward to finding some good solutions to the problems that we have in Georgia and working for the people of Georgia. Thank you.
Age,
23, Representative Hughley, Minority Leader.
Good morning. I'm Carolyn Hughley. I'm privileged to represent House District 141 out of Columbus, Georgia. I'm also the Minority Leader of the Georgia House. I look forward to learning more as we explore this topic and explore solutions to the issues that confront us. So thank you, Mr. Chair, for having us today.
Ma'am, and not representative, but he is in the insurance department. Bryce Rawson, would you like to say a few words?
Hey, good morning, everyone. My name is Bryce Rawson. I'm the Director of Legislative Affairs for the Georgia Insurance Commissioner's Office under Commissioner John King's leadership. It's been a pleasure to work with this committee thus far, and I'm excited to see what all we can accomplish today.
Thank you, sir. And last but not least, I skipped you. I'm sorry. Ms. Russell.
Hi, I'm Catherine Russell. I'm the Director of Policy and Policy Counsel to Commissioner Tyler Harper, the Commissioner of Agriculture here in the state of Georgia. And I'm just really honored to be here amongst the Assembly members. And thank you for your time and attention to this matter.
Thank you. Do we have any members on Zoom? I didn't know if we had any other members that were out there that might want to say a word or two. Okay, we're good there. So at this time, the Insurance Information Institute had to unfortunately cancel today's presentation, but they will continue to work with us in the future, and we appreciate their help and their resources. At this time, we have Jim Murphy, Chief Actuary and Vice President of Enterprises Analytics, Texas Windstorm Insurance Association.
Tell them to unmute themselves.
Please unmute.
Yes, sir. Good morning.
Mr. Murphy.
Members, thank you very much for having me. Can y'all hear me okay? Can y'all hear me okay?
Try it again. Try to unmute. Can you try again? No.
No.
Give us 1 second.
Give us 1 second, okay?
Sure.
We can hear you, but we'll just give you.
Try again.
How about now? No.
Maybe try.
I'm just going to keep talking. See if y'all can hear me.
So media services can hear him.
Got it. I'm told that the live stream can hear me. How about now?
We're working on this.
Of course.
You might need to call in. You might phone a friend. Well, he can hear us. So.
Never had this happen.
There's plenty of representation in the building. So.
Yeah.
Hey, so is it on our end or his end? Okay. Can you ask him to try it one more time?
Sure, I'm happy to.
Would you try this one more time, please?
Yes, can y'all hear me now?
Please.
No, it's still not coming through in the room,
Okay.
but I hear it on your screen. Okay. But so he's on.
Jim, I don't know how much time you have, but we've got someone
Fine.
coming up to work on it. So maybe take a 10-minute break and we'll try again. Sorry
Sure.
to do
Of course.
this, but thank
No
you for
worries.
your time.
Absolutely.
We'll be at ease for a few minutes.
Check 1 2, check 1 2, testing, testing 1 2.
I can hear you.
Great. Jim, can you come back, please?
Yes, sir. Can y'all hear me now?
Yes, we can.
All
Sorry
right.
about that.
No worries.
Do we need to get Demetrius back or?
I'll take some.
Okay. And if you'll give us 30 seconds, we had a member that walked out. And we
course.
need to get, what's his name on? Matthew.
He's on too. I could just let him.
Matthew, you're here?
Yeah, he spoke a second.
Okay.
Yes, Chairman, I am. Thank you.
All right. Thank you. Elvis has left the building.
Just left the room.
I know. There he is. All right, is everybody ready to get back going? We have our technical difficulties resolved. Can we get Jim back on?
I am here.
Okay, Jim, take it away. Sorry about that.
No, I totally understand. Technology is what it is. Thank you very much for having me this morning. Good morning, everyone. As has been said, my name is Jim Murphy. I'm the Chief Actuary for the Texas Windstorm Insurance Association. Just a quick disclaimer, we also manage the Texas Fair Plan Association, but my comments today will be focused on Texas Windstorm. Happy to answer any questions that you may have on the Fair Plan as well, though. I have a brief presentation. I should have plenty of time to answer questions. I'll be going over a little bit of the history of our association, our operations, give you kind of a snapshot of where we are today, our recent growth, and then really spend some time on our funding structure, specifically the state involvement from Texas's perspective, and also reinsurance, which is a major factor in our reinsurance and our funding program altogether, and then talk a little bit about our rates that we charge for our policyholders. So with that being said, I'll just move into the presentation. Again, I should have plenty of time for answer questions at the end, but please feel free to interrupt me at any point if I say something that needs a little bit of clarification or you'd like to hear a little bit more about anything. So the Texas Windstorm Insurance Association was established by the Texas legislature back in 1971. We've been around for a little over 50 years now. It was in response to some private market contractions along the Texas coast after a series of hurricanes made landfall in Texas in the late 60s and early 70s. Originally, it was set up as a syndicate of private insurance companies in the early years. All of the profits and losses were shared proportionally by the companies that did business in Texas. That has changed substantially over the years. I'll go into a little bit more details on how we are organized today. We are governed by the Texas Insurance Code and Chapter 2210, and also regulated by the Texas Department of Insurance. Our board of directors is appointed by the insurance commissioner here in Texas. That representation, there's 9 members. 3 of them represent the insurance companies. 3 of them are coastal residents, which is where we do our business, and 3 of them reside in inland portions of the state of Texas. We are a residual market insurer. So what that means is, by design, we are here to provide insurance for folks who can't get it in the private market. We only write on the Texas coast, 14 coastal counties, and a small portion of Harris County, but not including the city of Houston. We only write wind and hail coverage. So for all of our policyholders, there will be an additional policy that covers fire and theft and the other standard homeowners type losses. We also write commercial properties, but again, only the wind and hail portion for those properties. We are intended not to compete with the private market. So really we are there as a stopgap for folks who can't get insurance through the normal means. And we have participation for all insurance companies that write business in the state of Texas. If we have a large loss, they are responsible for participating to some extent in the payment of those losses. We operate as a not-for-profit insurance company. We're not a nonprofit, but our income is not federally taxable because we are an instrumentality of the state of Texas. We're not part of the state. We're not a state agency, but we do serve a public purpose. Day to day, we operate like you would think a normal insurance company would. Agents submit applications to us. All applications that satisfy our minimum eligibility requirements are issued policies. We collect premiums, and then if there's a loss, we pay the loss. Annually, any net gains from our operations are deposited into a trust fund that's held by the Texas Comptroller of Public Accounts for the sole benefit of paying losses in future years. So we don't pay out profits to insurance companies or to anyone else. Any profits that we earn over the course of the year just get held in reserve for future years. We do not directly receive any money from the state of Texas. And again, we're not a state agency. As of June 30th of this year, TWIA insured just over 280,000 coastal properties across the coast of Texas, totaling just over $120 billion of insured limits on our building and contents. We wrote almost $400 million in premium in 2025. We have just over 200 employees and almost 150 contractors, most of whom are in our claims department, handling claims from a hurricane that made landfall in Texas last year, Hurricane Beryl. As a percentage of our premium, our operating costs are pretty low, which tends to be the case when you only write a catastrophe risk. Our premiums are fairly high, and in many years we don't have any losses. And the years that we do have losses, obviously they're pretty substantial. But as a percentage of our premium, we run about 5%. The cost of running the organization, which compares very favorably to the private market, which is closer to 10 in Texas. And then there are almost 40 of these residual market plans nationwide. There's a fair plan in Georgia, for example, and those plans average closer to 40% operating costs. Again, because many of them are very small, the operating costs tend to be a larger percentage of their premiums. We are the largest allied lines writer in Texas. Allied lines is the insurance designation for wind and hail coverage. And we have the third most policies of any of those 37 residual market plans. Citizens of Florida and the California Fair Plan both have more policies in force than we do. As a residual market insurer, the private market tends to go through cycles where they expand and contract. They're willing to write more or less policies, and we do just the opposite. We pick up the slack. So over the last 10 years, our policies in force have been close to 300,000 where they are today, and they dropped down as low as into the 180s as the private market was very robust for a few years. And then we've slowly been growing over the last few years. So we're back today kind of about where we were about 10 years ago. Our exposures are significantly more, though, due to increases in home construction costs. And as a result, our premiums are also pretty high. Texas has two large cities on the coast, and that's where we write the majority of our business. The city of Galveston is on the northern end of the Texas coast. It sits right in front of the city of Houston. And so that is a very large concentration of insurance exposure. Insurance companies that are trying to manage their catastrophic risk tend to not want to write a lot in the city of Galveston just because it's kind of a combined exposure with the city of Houston. So since really day one, I think Galveston has been our largest area of concentration. Corpus Christi is a little bit farther down the Texas coast. It's a fairly large city, but it doesn't have any big cities behind it. And so it's more of an independent kind of exposure as we look at it for the risk of hurricanes, which is obviously what we do. Our funding structure is a little bit interesting. Most insurance companies have to have enough money set aside in surplus to pay for the bad years, and then obviously collect enough money in premiums each year to make sure that they can pay the claims that they incur. Texas windstorm is set up intentionally very differently because, as I mentioned before, every year we shift any excess funds over to the trust fund. So we basically start each year at zero. State law in Texas sets out the funding sources that are available to us to pay losses and the order in which they are used. The first source is obviously the premiums that we collect through the course of our normal business over the course of the year. And so we charge policyholders premiums for their policies, and then we pay the losses that we incur throughout the year from those premiums. Covering wind and hail means, and generally in the springtime, we'll get a lot of hailstorms, potentially a tornado here and there, or just other straight line wind events that we can generally easily cover through our premiums. The big risk for us is obviously the hurricane that makes landfall and does a significant amount of damage. If our premiums are insufficient to pay losses in any year, then we are allowed to tap into that trust fund. And so we go through the entire balance of that trust fund if necessary, which is exactly what we did last year for Hurricane Beryl. And then the next step in our funding, at least through last year, I'll get into it a little bit. The legislature here in Texas kind of changed things up a little bit for us for next year. But as it is right now today, the next step would be public securities. So TWIA has the authority to borrow money from the private market, issue bonds, basically. You might think of as similar to a bond issued by the state or by a municipality, a revenue bond there. In order to pay losses, these bonds would be backed by TWIA revenue. They would not be obligations of the state of Texas, and they would be repaid through our premiums or, if necessary, additional surcharges on our policyholders or other policyholders along the coast. Beyond the public securities are several layers of member assessments that would be assessed directly to insurance companies. Insurance companies would be assessed proportional to the amount of premiums that they write statewide and on the coast. And there's several layers that kind of alternate between the bonds and the assessments on companies until you get up to about $2 billion. And then beyond that point, we are required to secure enough reinsurance or other risk financing so that we have funding up to what's called a 100-year storm season. So a year that there's only a 1% probability that you go beyond that point. There's a 99% chance that it's less than that point. Our board sets that number each year, and we're required to have funding at least up to that number. And at least in the last few years, it's been roughly half our funding. It's slightly more than that the last couple of years. And so we rely heavily on reinsurance and related capital markets to secure that funding, which I'll go into in a little bit more detail. So this is just a quick picture of what our funding looks like this year. Hopefully we're about 2/3 of the way through hurricane season, and we've been lucky so far. But if we have an event over the course of October or potentially later than that, this is how we would pay for those losses. So we really don't have any amount of money to speak of in the trust fund because it was used for Hurricane Beryl. It's, I think, slightly less than $10 million right now. The $2 billion of alternating public securities and assessments. And then for this year, we had just over $4.2 billion in reinsurance available to pay our claims. And that comes from a combination of two different sources. So we utilize traditional reinsurance. And so that is effectively insurance for insurance companies. There are reinsurance companies globally. Lloyd's of London is one of the most well-known that offer these policies. And so we have, I think over 50 different reinsurance companies across the world that have a share in our reinsurance program. It's too large for any one company to manage alone. And so we have arrangements with them. So a policy is in force, we pay the premiums and they pay the losses if we have them. And then we also invest in what are called catastrophe bonds. And the word bond shows up there, but they're completely different than the revenue bonds that I was talking about before. This is basically a way for investors in the private market to diversify their own portfolios. And so they set aside money in a dedicated account, and that money is available to us if there's an event per the contract language, and then we can use that money to pay losses. And then at the end of the term of the catastrophe bond, if we haven't used the money, then they get it back. And in the interim, we pay them an interest charge. And so it looks like a financial investment to them. It's a bond where they loan out some money and then they get it back at the end. But if there is a hurricane, then that money is available to us. So it's fully collateralized. There's no credit risk there for us, and it's a good tool for us to go beyond the traditional reinsurance market to get some risk transfer in place for our losses. as I mentioned before, the Texas legislature decided to change up our funding a little bit just a few months ago this spring. This will go into effect for 2026. The public securities have been replaced in our funding. We only had to issue those once, but because they are only backed by our revenue, and our revenue isn't necessarily viewed as terribly secure by the private markets, because in any given year, all of our money might have to go to pay claims, and there wouldn't be any left over to repay our debt. So we were paying some fairly high interest rates on those public securities. The state decided that it wasn't really in our policyholders' best interest to have to pay the costs associated with those. So they decided to give us some alternate ways of paying claims. And what they basically did is they consolidated all those interlaced layers of assessments and securities into just two big layers of $1 billion each. And the first layer is a financing arrangement with the state. Effectively, what they have given us is the ability to take a loan out against the state of Texas's general revenue. And so we would contract with the controller of accounts here in Texas. It would be a reasonable interest rate. It would slightly higher than what they might get on a risk-free basis investing their own money, but definitely lower for us than we could get in a private market. And it would be repaid through statewide policy surcharges. And so that's the real big difference for us, at least, is if we have a loss that requires us to dip into this source of funding, we would borrow money from the state, and then the state would be repaid by every policyholder in the state of Texas that has a property policy over the course of up to 3 years. So that's a big change for us. We're working with the Department of Insurance and the state to put everything in place so that we'll be able to access that for next year. And then the company assessments are still part of our funding. Obviously, the companies have a role to play in this, and so they continue to have some skin in the game there. And then we would continue to purchase reinsurance beyond that. However, as we've been growing in the most recent years, the state realized that we were spending more and more of our premium dollars on reinsurance, and they thought it would be more appropriate for us to take some of that money and hold on to it. So they changed the minimum required funding level from a 100-year storm season to a 50-year storm season. And so that's effectively a lower dollar amount, and we would have to purchase less reinsurance to meet that requirement, thus saving our policyholders some money each year. The board is allowed to purchase reinsurance beyond that. It's just the minimum. But if the board purchases above that minimum, then the costs of that additional reinsurance are assessed directly to companies. And so it wouldn't be paid through our policyholder premiums. It would be paid from the company assessments if the board chooses to purchase any additional reinsurance beyond that. So I talked a little bit about the difference between traditional reinsurance and catastrophe bonds. We are a very large purchaser of reinsurance. $4 billion is very significant. I think we are kind of on the same level as companies like State Farm, which you might think of as very large national insurers. Citizens of Florida also purchases a significant amount of reinsurance. And so we do everything that we can to try and keep our costs as low as possible by basically looking for any different alternatives, any different ways to get this done as cheaply as possible. So traditional reinsurers will always be part of our program. That's what they do. Their whole model of business is reinsuring catastrophe risks that can't really be held by a single insurance company. They sell this reinsurance to insurance companies all over the world. And so even if there's a big hurricane somewhere in the States, they can pay for it from the premiums that they've collected from other companies in other parts of the world against different risks like earthquake or flood or that kind of thing. But the catastrophe bonds are really important to us just because a lot of large investors, like you could think of like pension funds that have billions of dollars assets under management, or even some countries' state sovereign funds, are looking for diversification in their portfolio. The risk of a hurricane making landfall in Texas is fairly independent from ups and downs in the stock market. And so they look at this as a nice tool to kind of protect their own assets from what you might think of as traditional market forces. And obviously it's a great tool for us to be able to place some of this risk with them. And so we've been issuing catastrophe bonds for over 10 years now. We were one of the first adopters of this tool. Certainly not the first, but I think one of. And we continue today to be one of the largest adopters. So we have a lot of money with investors. We've got some established relationships with them, and this continues to be a crucial part of our funding going forward. That's the basics of our funding. I'll talk a little bit about our rates just because that's always important to our legislature, to the Department of Insurance here in Texas. We do operate, as I said, as a traditional insurance company for the most part. So we charge premiums to our policyholders based on the risks that they're submitting to us. Obviously, a big house gets charged more than a small house, that kind of thing. Our rates by law must be reasonable, adequate, and not unfairly discriminatory, which is a fairly standard kind of requirement for insurance rates. There's some additional language in the insurance code that applies to all insurance companies, not just us, that rates must be fair and just as well. We make a rate filing each year in August with the Department of Insurance. It can be for no change, or it can be for an increase or potentially a decrease. And then rate increases are subject to review and approval by the insurance commissioner here in Texas. And so there's some requirements laid out in our statute on what we need to look at. It's all the standard things that insurance companies tend to look at: potential losses and expenses and that sort of thing. In order to file for a rate increase, 2/3 of our board of directors must vote in favor of it. There's some other requirements with regard to board vacancies, and all of the materials that are considered by the board have to be posted publicly on our website, available 2 weeks prior to the vote. And we do accept public comment at all of our meetings, specifically at the meeting where we make a recommendation for the rate increase. We have significant public comment that tends to be provided at that meeting, both from constituents, from policyholders, and also from their elected officials. That's the extent of my prepared remarks. I know I went pretty quickly. I was trying to be respectful of your time, but I am happy to answer any questions that you may have on those topics, on anything else. However I can be of service to you today, I'm happy to do it.
Thank you so much. We do have a number of questions, and if you'll indulge us, starting out with Minority Leader Hughley.
Thank you, Mr. Chairman, and thank you so much for the presentation today. I have a couple of questions. The first one is there a requirement of homeowners within the counties that you have outlined to purchase this insurance when they buy a home? Is that part of the requirement?
So there's no state requirement. However, mortgage companies will require insurance. And so if they have a mortgage on their home, then they will be required to purchase insurance. That's correct.
Also, how does this program interface with the fair? You say you have Texas Fair program as well. So explain to me how these two things work together.
Absolutely. So the Windstorm Insurance Association only writes wind and hail coverage, and they only write on the coast of Texas. The Fair Plan writes a complete homeowners insurance product. So pretty equivalent to what you would get from any other insurance company, and they write statewide. So they are there for folks in the rest of the state who just can't get insurance at all. And for folks on the coast, if they can't get insurance at all, they can get a homeowner's policy from the Fair Plan, but it won't include the wind. They'll have to get that separately from Texas Windstorm. But Texas Windstorm will just writes that one coverage wind, and it just writes in a very limited area.
So a homeowner in these counties, if they cannot get insurance in the regular marketplace, would in most instances have two policies, one from the TWIA and one from Fair.
That's correct. Yes.
Is that okay? Thank you, Mr. Chairman.
Yes, ma'am. Chair Lady Taylor.
Thank you, Mr. Chairman. I know you referred to this as just windstorm and hail. And being on the coast, you're going to have flooding, you're going to have water come in. Would that be a separate policy? So it would not cover that?
That's correct. So flood policies through, like, for example, the National Flood Insurance Program, the NFIP, would be where policyholders would get coverage for the flood waters that are often associated with the storm.
So technically you could have three policies. That's where I was going with this, because you, again, a lot of it is actually going to be the water damage. I'm from South Georgia, and we're just getting over the last storm. And okay, when in looking at your different parts of your plan, it has a lot of good pieces and a lot of moving parts. Where you talked about the 144 contractors, are those claims examiners? Are they, who are they? You're not actually contractors that are going to rebuild something. It's somebody working within, not, you don't have a group of people that go out and fix the properties.
That's absolutely correct. Yeah, we let the policyholders manage the reconstruction, the rebuilding part of it. Those are, when I say contractors, temporary workers that are there to handle the claim volume, as you said,
The-
claims examiners.
The stormtroopers or whatever they're called after the storm.
Yes,
Okay. All right. Thank you very much.
I had a question. You said you had the association currently has 238 employees. Now, are those licensed agents that are selling these products, or could the private guys who are in the insurance market, could they sell this if their private markets are exhausted and they have nowhere to go? Could they come to your organization and sell the policies through y'all? I guess there's different licensing and credentialing for these people. I just want to make sure that these guys had that opportunity as well.
Sure. So we don't employ any licensed agents ourselves, at least not in that role. We accept applications from any licensed property and casualty agent in the state of Texas. And
Okay.
so that could be an independent agent that, represents a handful of companies. It could be an agent that, normally only sells one company's policies, but they have to send some to us because they can't get it through their normal insurer.
Assume they're paid just like the other companies pay y'all. They pay them through commission.
We do pay a commission to
Fees
the
or-
agents. Yes.
Okay. Okay. Also, when Chair Lady Taylor was asking about the flood damage, do y'all offer that as a part of your organization, or are you just the wind damage? Do you also offer the flood damage as well?
We do not. By statute, we can only provide wind coverage. And so that agent who's submitting an application to us would presumably be
Have
able
that.
to determine what the risk is for their particular client and help them find flood coverage.
Okay. Well, thank you, sir. Mr. Douglas.
Yes, sir. Thank you, Mr. Chair. The catastrophic bonds, are they set up through the legislature there? or
They're
they-
not. So we handle that ourselves. Talking about insurance agents, when you're dealing with reinsurance, they tend to call themselves brokers, but they're effectively an agent. We've got an agent that walks us through that process and helps us set up all the documentation that we need.
Okay, thank you.
A 19. Ms. Harrison.
Hi, I just have a quick question for you. It looks like we've discussed, we've talked about flooding, we've talked about wind, we've talked about a couple of other, we've identified a couple of other types of coverage. Is there anything that is outstanding that you commonly see, areas that aren't covered, that it may be important for the committee to consider as something that would behoove residents to be aware of and consider?
I don't think so. Like I feel like those are kind of the big three. I think that when I think of the standard homeowners policy, it's going to cover fire, theft, water on premises. It won't cover flood. And really the only other big risks are going to be wind and flood. And so those are often separate policies. As was mentioned, many of our policyholders have 3 different insurance policies for those risks.
And then I have one further question.
Yes. Go ahead.
So I'm not a math girl, but I'm trying hard. So I was just kind of looking at the numbers, and it appears as if you have about 280,000 coastal properties, and then it looks like you've got your 240 employees and 144 contractors. Would you say that it's safe to assume that it takes about 1.5 employees per property if we're trying to figure out the scope or the size of if anyone were to replicate the program that you guys have?
I wish there was an easy rule of thumb. I'm not sure there is.
It's just a question.
Yeah, of course. I think, to issue one policy, you're probably going to need, maybe a dozen people. But then the more policies you issue, you gain some efficiencies, and we've grown 20% over the last few years, but we certainly haven't grown our staff that much. It's probably been a low single-digit growth in our staff over the same time period.
Thank you.
Thank you, Ms. Russell. Chair Lady Taylor.
Thank you, Mr. Chairman. Under the public securities, how many times have you had to go into issue bonds and had to go to the carriers? And for how much money?
Sure. So we only used the bonds once. We actually issued some bonds kind of on a pre-event basis, just so we'd have the cash on hand quickly available to pay claims. We issued them before Hurricane Harvey, which made landfall in Texas in 2017, and we ended up using them pretty much all for Hurricane Harvey then, and then we repaid them, but it was a pretty expensive process. I think just that one time was enough for everyone to decide we maybe want to go in a different direction. The assessments have been used many times in the history of our association. As early as the early 80s, I think we assessed companies just over $100 million for Hurricane Alicia. We assessed them fairly significantly in 2008. We had two hurricanes that made landfall in Texas that year, Dolly and Ike. Right, the mid 2000s was a very there were a lot of hurricanes that made landfall those years. And so for Hurricane Ike, we ended up assessing the companies, I think, just over $400 million. And so that was the kind of the big assessment in our history. And so there've been a few other ones kind of here and there that were smaller, but it's a process that's taken place multiple times, and I think it seems to work pretty well for us.
In looking at your reserves, how much is in your reserve? I know you indicated you used it all up, but how much do you normally have, and what's in reserve now?
So that trust fund, it builds up kind of slowly over time. You know, each year we put in a little bit, and then when we take that out, we tend to take out a lot. The largest it's ever been was in 2017 for Hurricane Harvey. I think we had $800 million in there, not quite $1 billion. It was not nearly that large for Hurricane Beryl, and so it was just over 100 million, not quite 200 million, I think. That's
Okay.
just what we had built it back up to.
And looking again at the coverages, again, coastal areas, this is purely property. It would not include like crops that we have areas where there are crops. It would not cover anything like that, or business interruptions, things like that, only the building itself or the property. Is that correct?
So we do not cover crops. We do offer business interruption coverage for commercial properties, and other
Okay.
things like additional living expenses. If someone can't be in their home because of the storm, we'll provide that coverage as well.
And as far as your reinsurance goes, have you seen, I'm sure, but a rate increase, and what are your costs for it? And how many carriers do you actually have? Do you put the deal together, or do you have a consultant or somewhere that helps you find these carriers?
So we do work with a broker that helps us through this process. We worked with one broker for many years, and we have a kind of an RFP process about every 5 years, and we recently made a switch about 5 years ago to a new broker. But they absolutely help us through this process. I don't think that we could do it at all without them. They have the relationships with the reinsurers. They're able to present us to the reinsurance company and kind of convince them that we're worth doing business with, that sort of thing. Reinsurance has been a big part of our total expenses ever since we've been buying it, and we grew fairly substantially the last 3 or 4 years, and that caused our reinsurance costs to go way up. So, last year we were close to $400 million that we paid for reinsurance.
Again, it's going to reflect your losses. That's basically what they'll amount, how they did it anyway.
So that losses are a part of it, but more than that, it's just the amount that we have to buy. It's the exposure, and so when we insure more homes, then we have to buy more reinsurance to cover the potentially larger loss. But our reinsurance, kind of the price per reinsurance, the rate that we pay tends to go up and down. Like the insurance market in general, the reinsurance market just tends to be fairly cyclical. I think rates went up a good deal maybe 3 or 4 years ago, but they've been slowly inching downward the last few years.
The Gulf Coast area, and Texas in particular, has had a lot more storms, I guess, than what was normal. We've gone through a cycle of a lot of them. Have you seen that affecting the economy and the development of the coastal areas and your barrier islands? Are they still building?
They are. I'm not sure that The storms have had any kind of impact on development. I think people still want to live on the coast regardless. And I'd like to think that being able to get insurance from us if they can't get it from somewhere else certainly helps that. I think the coastal communities would say that having an accessible insurance market is crucial to their own development.
And do you have an average cost of what a homeowner would pay, or does it have too many variables? Again, if you had a home on the coast, about what would how would it affect their monthly or annual premium?
So obviously it does very much depend on the cost of the home that is being
Right.
insured, but I think as a nice round number, I think around $2,000 for our policy is probably what our average policyholder pays.
Thank you.
Thank you, ma'am. Thank you, sir. Chair Lady, Minority Leader Hughley.
Thank you, Mr. Chairman. From a practical perspective, I'm a homeowner. I've had a claim. I got to deal with 3 different entities. And normally the biggest complaint is, was it the water that caused my damage or was it the wind? How does that work? And what is the experience of your typical homeowner in these situations?
So it absolutely can be burdensome. I think it would be rare for them to have to go to each of their 3 policies. I think if it's wind, it's going to be us. If it's not wind, it's going to be the other homeowner's policy. But it is very common to have to deal with both the wind policy and the flood policy. It can be tricky because we'll send out people to evaluate the claim, and the flood policy will send out people to evaluate the claim. But obviously, our folks and their folks may have a different opinion on things. So when we have had issues in the past, that has been one of the issues that we've had to deal with. If the structure is still standing, it tends to be a little bit easier to deal with the claim. The flood will leave a watermark on the walls, and you can pretty much say anything below that point is flood, and anything above that point is probably wind. It gets especially hard when the structure is completely destroyed. And so after 2008, when we had that Hurricane Ike made landfall, and it did completely destroy several large areas of the state, the legislature put in place a program where we call it an expert panel of engineers and meteorologists and academic folks that when the storm makes landfall, they'll put together a fancy model to try and estimate, wind speeds at certain points in time and when the waters arrived in the flood, and come up with a mathematical equation to determine how much was wind versus water. And that's how we would adjust the claims in the event that we had another large loss like Ike that resulted in a lot of homes being completely destroyed. We actually, luckily, we haven't had a chance to use it. I hope we don't. After Ike was the last event that had a large flood component for us. But that's the tool that the state legislature put in place in Texas, just to try and get some objectivity around it. It's less of a judgment call. It's more of we found the smartest people we know, and this is their best estimate as to how much is wind and how much is water.
And the other question that I have is, you went from the 100-year event to the 50-year event in terms of the minimum requirement, because these events are happening more frequently. Is it still the typical thing that you would expect with the 100 versus the 50-year, or what does that really mean?
So we're definitely kind of being held to a different standard than the private market. I think if you're just looking at a regular insurance company, I'm not sure the Department of Insurance would be very comfortable if they only had funds up to the 100-year event. I think many times they want them to be at least up to the 250-year event. I think they want to make sure that company is going to have enough money to pay its claims when the big event happens. Because we have these other sources of funding and we're not solely reliant on our premiums, I think that the legislature felt that it made more sense for us to not spend all of our money on reinsurance each year, but to save some, try and build up that trust fund again. And so that, I think, was part of the reasoning behind lowering it from a 100 down to a 50. To put it in other terms, right, at a 100-year level, there's a 1% chance that you have a storm more than that. At the 50-year level, there's a 2% chance that you have a storm more than that. So we should still be fine 98% of the time. But in that other 2%, I think the assumption is certainly that the legislature would get back together and they would figure out how to make sure our policyholders got paid. I don't think that their intent is to leave anyone kind of high and dry, but that's just a conversation that's probably, at least in their minds, I think, best held after they can see the event and know what they're dealing with.
One more question, Mr. Chairman. So as you look forward, because a lot of things in insurance is based on what has happened in the past, but as you look forward and with these recent changes that you have in your financing structure, what makes you confident that this is the correct path?
I'm not sure there's a correct path, but this is a single correct path. But I think this is a good path. As I mentioned, just now, the vast majority of the time, our policyholders will have ready access to the funds that they need to rebuild their homes, to make their repairs. I think that we're much more comfortable just being able to borrow directly from the state than have to go out into the private market. I think that we'll be able to get funds faster. It will cost us less to get those funds. We've used the member assessments many times in the past. We don't have any concerns necessarily there. And then really not having to buy as much reinsurance, or if they do choose to buy a lot of reinsurance, being at least part of that reinsurance being paid by the companies instead of just by our policyholders helps. And so I think with this new funding structure going forward, we will continue to have ready access to the funds that we need. It will cost us less, which will allow us to put more money into our trust fund. And that just kind of snowballs. The more money we have in that fund, the less we need to rely on the other sources of funding if we have a hurricane. So that really helps us down the road to reduce our costs, the more money we have in that fund.
Thank you so much. Thank you, Mr. Chairman.
Yes, ma'am. 26. Mr. Rawson.
Thank you very much, Mr. Chairman. And thank you, Jim. This is Bryce Rawson with the Georgia Insurance Commissioner's Office. Just wanted to get kind of an idea of some of the market conditions in Texas. And I understand from the beginning of your presentation that all companies offering property coverage are paying into this and would pay into the assessments. How many companies do you have in Georgia in Texas that are going to be paying into those assessments, if you had to go there?
So total number of companies tends to be in the 300s. Those are licensed property insurers in the state of Texas. Not all of those companies actually are actively writing. Many of them just kind of exist legally, but aren't actually writing.
Certainly, yeah. And that similar situation here in Georgia, we have about 210 companies that are writing just homeowners coverage and that are actively writing. And that certainly does range from the folks who are writing from just a few dozen to those who are writing about 25% of our market. And that would kind of lead me into my next question. So the actual assessments themselves, would I be right to assume that they are somewhat based on the size of the company? And are you able to go in kind of I know it may be a little bit in the weeds, but could you go into the arithmetic there that says like how you determine how much a company is assessed?
Sure. So every year, regardless of whether we're making an assessment, we calculate the percentage that would apply to each company for their own internal planning purposes. We communicate that to them. What we do in a nutshell is we look at their statewide market share and we compare it to their market share on the coast. And so regardless of how big they are, if they write as much on the coast as they write elsewhere in the state, they can conceivably not get assessed at all. If they write at least as much on the coast as they write elsewhere, we don't assess them at all. They've done their share, so to speak. The companies that write less on the coast than they write elsewhere, those are the ones that we actually assess. And so we just look at that difference. If you write a 2% market share on the coast, but a 4% market share in the rest of the state, then that difference, that's going to be the base on which you're assessed. So that's kind of how we do it at a high level.
Thank you very much. Thank you, Mr. Chairman.
I had one more question for you. How many carriers have y'all lost in the state of Texas due to the storms and the hurricanes and the wind damage? Do you have a number?
I apologize. I don't think I have a good number. I have the sense that it's actually not that many. I think that we tend to hear about companies just anecdotally. We had a handful of companies that came to Texas in the last few years from Florida. And I think they were looking to kind of diversify their risks by writing in both Florida and Texas. and many of them ended up going under, not necessarily because of their Texas book, but I think they just had issues in Florida. And I probably shouldn't speculate too much, but we had a handful of companies that were actively writing on the Texas coast that had an impact on us, that went under. And so, we had, 10, 20,000 policies leave us and then come back all of a sudden when the company was liquidated. So there's been a few hiccups, but I think generally for the state of Texas as a whole, the market's pretty healthy.
Thank you. Chair Lady Taylor.
Thank you, Mr. Chairman. What is your definition of on the coast? Is it on the islands? Is it so many miles in, counties? How do you determine that?
It is largely just county. There are 14 counties that have coastal exposure. The one exception is Harris County. So there's a large bay that kind of goes inland behind the island of Galveston. And so the portion of Harris County that's right on the backside of that bay is also included.
Okay, thinking of Georgia, though we have coast, we are inland from the coast, and most of our damage was really inland. It wasn't directly, the winds lasted a much longer time than I guess we expected. But thank you very much. I appreciate this information.
So, anyone else? Thank you for your time. And if we have any more questions, I assume we could email you, or maybe we could call you with a group of questions if we have anything left. But thank you so much for your patience with us, and we appreciate your help. And thank you so much.
It's my pleasure. Thanks for having me.
I would say God bless Texas, but okay. Our next one is Travis Taylor. And Travis is he is the commissioner. He is the director of risk and resilience for the Alabama Department of Insurance. So with that, I'll turn it over to Mark Fowler. I'm sorry. Travis Taylor.
That's all right. Can you see my screen? I'm a Teams guy, so I can you guys see my presentation?
Yes, we can see you.
All right, perfect. Again, my name is Travis Taylor. I am the director of the Office of Risk and Resilience, seated inside the Department of Insurance. I work for Commissioner Mark Fowler. And if Commissioner King is on the call, I apologize. I'm sure he has heard this presentation about strengthening Alabama homes many times before in NAIC meetings, and probably his staff as well. Also, a disclaimer, I'm an Auburn guy. So, Mr. Douglas, I saw a big Georgia Bulldog sign on your nameplate. So I'm going to try not to make any jokes that are hurtful to you.
Be with us maybe in 2 weeks, so be careful what you say.
Exactly. And, I'm pretty much given up at this point, but I'm trying not to be a quitter, but, we'll see. But anyway,
please.
Anyway, the Strengthening Alabama Homes mitigation program is one that has become nationally recognized. We talk about it numerous times a year. Both myself and Commissioner Fowler are on many national committees that we do talk about our program. And the bottom line, this program started on the heels of Hurricane Katrina and Hurricane Ivan. And our then Governor, Bob Riley, sent our then Commissioner, Jim Ridling, our insurance commissioner, Jim Ridling, down to the coast of Alabama and said, look, we got to have something done about this. And Jim was a former insurance executive for 30 years before coming to the department. And he realized that if you don't change the economics after a storm, nothing is going to change. All right. And the definition of insanity is doing the same thing over and over again and expecting something different to happen. So on that, the Strengthening Alabama Homes program was kicked around and designed, and it took years to really get it all in place. But again, it is a mitigation program that they came up with And of course, funding and all those kind of things were very much a challenge to do that. And once we got the basics in place, it took a few more years to get those things done. And once we got going and get the funding stream set up, and that's a key part of what we do. Our funding stream is part of legislation. We are able to retain a portion of the insurance fees that we collect during the year, and from our insurance agents throughout the state of Alabama. So again, the purpose is to reduce the risk of high winds. We partner with the Institute for Business and Home Safety, IVHS, and adopted their Fortified program, which is a standard for the roof mitigation program. And for me, I'm not an engineer by any means, but the way I explain the Fortified program is it's a layering system. So it starts off with about an inch piece of plywood across your cross beams. There is a rubber membrane that goes across that, a very special sealant that's used, a very specific nailing pattern that's used to put that down, and then on top of that would be your shingles or your metal roof, whatever you decide. So, and again, if there are things that come up throughout this, there are questions, and there are a lot of buzzwords that we use. So please stop me anytime you guys need anything. So let's see if I can get on through. And again, 2011 is when we started the program or started the actual legislation. We did our first grants in 2012. And we started off on our very small exposed coastline. Mobile and Baldwin counties, we have about 40 miles of coastline, but somehow, some way, we always seem to be a little bit of a target for some of the hurricanes that have come into the Gulf. And we had to make some changes. And as you can see, 2018, we were allowed to expand northward in Alabama. Whereas, fortunately, hurricanes only come so often, but when they come, they pack a wallop. But the rest of the state, we fight tornadoes, windstorms, hailstorms every day. So we had to figure out a way to not only protect the people on the coast, but also move it north as well. It is a $10,000 grant that can be put into a roof for the citizens of Alabama with the Fortified designation. Also, part of that, or one of the best parts of this program for us is, for our legislation, is a mandated discount that people have when they follow this Fortified program. A home evaluator comes out, looks at the home, makes sure it's in good repair, meets all the requirements that it has a certified contractor, comes out, puts the roof on, and at the end of that process, the homeowner is given a certificate that they can in turn pass on to their insurance company, and they receive their discounts. The ROI down on the coast is about 6 years now. So it's really a really good program I'm sorry, I should have said that. It's off the discount of your wind portion of your premium, which down on the coast is an extremely big part of the premium itself. So the ROI is able to pay for that within about 6 years. So it's a really, really exciting part for people to take advantage of the program. As I mentioned earlier, it comes from a portion of fees they were able to retain throughout the year. We also get direct donations from different private entities, private and public partnerships, and we generally run about $17 million a year for our program. I was noticing in Jim's presentation, everything is bigger in Texas. He used the word billion a couple of times, and which is we don't understand that in Alabama, but we'd love to get there, but I don't know if we will. Again, talked about some of the requirements for the homes. You cannot, at this point, for IBHS standards, for the fortified standard, they don't have anything for condos yet or mobile homes. They're working on both of those, interestingly enough, so which would definitely come into play for the folks in Texas on the coast and Georgia as well with some of those dynamics. And we are trying fast and furious to help them along to get those designations. You have to have an insurance policy in place for your home to be part of it and be eligible for the program. You also have to have flood insurance if you're in a special flood area. And again, the certified fortified evaluator through IBHS will come and take a look at your property and make sure you're eligible for the program. How we do quarterly drops for Mobile and Baldwin counties, it's an online application process. We do it 4 times a year. We're on the fiscal year. Today is actually the first day of our fiscal year. Next week, we will actually do the first quarterly drop. The presentation says we have anywhere from 50 to 75,000 people on our website waiting on those grants to drop. The joke is they go faster than Taylor Swift tickets, generally because it takes a very few minutes for them to be gone. And when they are gone, they will get on the website, it will basically stop the application process and they'll be forced to wait till the next application drop. Block grants we put in place for our Habitat for Humanities and a lot of our nonprofits, strictly because they are a volunteer organization. Not a lot of these people have big organizations or big volunteer groups. So throughout the year, they're able to do those and process their applications as they have volunteers to do those kind of things. All right. We are a completely funded organization or program. We don't have to worry about that going away because our legislature has granted us that access to those funds. We don't take anything away from our general fund. And we are, as those fees come in, we're able to make those donations, or not donations, but make those into our grant disbursements so we can do those on time every quarter.
Excuse me, how are these grants paid back, or are they paid back? These $10,000 grants?
No, these are not paid back. These are paid directly, and as part of this process, they're not paid directly to the homeowner. We pay these directly to the contractor after the work is done. So there's never any, anything that goes to the homeowner first, and then they pay. These all go directly to the contractor that's completed the work.
Okay, sorry about that.
No, that's a great question. Great question. These are a couple of the projects that we've done over the last few years that have been kind of outside of the actual online application process for Mobile and Baldwin counties. Although some of this work did happen in those areas. Africatown back in 2017 and 19, we were able to put 459 new roofs in that community. Protecting Good in 2023 in Birmingham, Alabama, through our habitats, we were able to put over 200 homes in that area. And then most currently, Selma, Alabama, based on a need they had from a terrible tornado almost 3 years ago now, they came in and hit that town. And for me, I live in Montgomery. I'm about 40 miles away. I grew up playing sports against guys from Selma, so it's kind of like a second home for me. Very close, and we were able to put $400,000 into this project to put 40 new roofs on houses in that area where the tornadoes did the most damage. We also, as you can see in Selma, the University of Alabama at Birmingham UAB Hospital is kind of spearheading this event. We are actually involved in a couple of other smaller towns, one in Demopolis, Alabama, and another one in Dothan, Alabama. Later this year, we're going to be doing the same type project that we did in Selma. So these are opportunities that we do kind of outside of the application process, like I said, because these allow us to focus on really some of these underserved communities, which we are so thankful for our Habitat for Humanities, our partners like UAB. They were able to go out into some of these communities and really make a difference pretty quickly. Again, this is kind of our budget status for the year, and you can see this is back in August. So the 17 million is what we'll have going into next year, which equates to about 1,700 homes a year on the $10,000. Now, some of them are not the full $10,000, which is kind of equates to some of the difference in the total number of dollars. Roofs completed to date, about 9,500. And we've had a little shy of, because now the current number as of September 29th, we're a little shy of $94 million that we put into the program so far. And again, the intent of this program was to change the behavior of Alabama residents. And one thing I need to make very clear, this program was never meant to be, the end all be all. We don't have an infinite supply of money to be able to put fortified roofs on every home. So again, we have done a little shy of 9,500 homes through our program, but in the state of Alabama, there are over 55,000 fortified homes. So the outreach or the customer, knowledge program that this whole program is intended to be is making a difference and is making an impact. The people are taking it upon themselves, even without the grant program. So we've done, if you do that math, 9,500 into 55,000, we're 15–18% of the total number. So the outreach program is working. So people are taking it upon themselves to protect their biggest asset, which is their home. So that's one of the things that we are most proud of, that people, although I'm sure they would love to get $10,000, who wouldn't? If they can't get it, they take that on themselves to protect their house. And again, I think we have made some huge strides in some of our admitted carriers writing policies back on the coast in some of the most, the toughest areas to write policy. The risk is very high for the hurricanes, the floods, the tornadoes that spin off of the hurricanes. So, and I heard somebody ask one of the questions about, insurance carriers pulling away. And I don't know the number specifically. We have had insurance carriers pull away from the coast and stop writing. But since inception of this program and the popularity of this program, they have started writing those policies again. So, which is always a good thing. And as I said, the Office of Risk and Resilience, where I am the director, we basically look at all things risk related in the state. Not only Strength Alabama Homes program, but I am also the state floodplain administrator. It runs out of my office. We oversee all of the National Floodplain Association, or National Floodplain coordination between the floodplain insurance program or flood insurance program. And we are kind of the go-between between FEMA and our constituents that way, and also our state properties that we cover through that program as well. So I apologize if I went fast through that, much like Jim, trying to be respectful of you guys' time. So any questions that you guys have of me or anything that you've heard or like some more explanation on?
Yes, sir. Thank you. I have a couple of people wanting some questions. First of all, Chair Lady Taylor.
Thank you, Mr. Chairman. Just making sure I understand the grasp of the whole program. It's not directly attached to any particular storm. This is a preventive, trying to get fortified homes before something happens,
Yes,
which
ma'am.
is great idea. And it's done through a grant program. Is it tied to income or ownership, or have to be a resident of the property that's being repaired or upgraded?
The initial for yes and no. And I say that because our homeowners and our online application process, they have to own the property as well. They have to be the primary occupant. There is no income level on those. Now, what we have done, and here recently, we have updated some of our regulations for our nonprofits, because originally, and I'm sorry, let me back up. In the beginning, this was based on income, but through the give and take of the legislation, that part was taken out. So the underserved community was the target in the beginning. They from the online application process and those constituents, there is no income level. What I was saying is we have recently put those things in place for our nonprofits, which target some of the underserved communities, which my personal opinion is that I think that's where a lot of this should be. And we try to focus in on that as much as we can. So there are some income limits that we have put in place for our nonprofits, but all the other requirements are the same.
And it's not limited to just coastal. As you said, you've expanded it to other areas. That's correct?
Yes, ma'am. We're in about 37 of our 67 counties in Alabama.
And are roofs the only thing that you do to fortify roofs only?
Yes, ma'am.
And who actually manages the fund? Is it under the insurance department or agency? You manage the funds, the claims, the certification. So how many and how big is the staff, and what is your overhead cost to operate?
We have a staff of 7, including me. We are all very much involved with the day-to-day activities. I approve every grant that is issued. I review every invoice that comes through my office. And we manage all of that through the Department of Insurance. And again, the Office of Risk and Resilience is a division inside of the Office of Department of Insurance. I'm sorry.
Thank you very much.
Yes, ma'am.
Chairman, can you speak to the discounts? Is there a required level of discount if the certification is achieved, or is that left to the companies and they just have to have some type of discount?
The 20% is kind of the norm, but I will tell you, ma'am, it does increase. And there are different companies that offer different discounts. There are some that I have seen up in the 40 to 50% discount. And it's interesting because a lot of those carriers that were not writing on the coast and not writing period because of the risk, now they are looking at the old adage of, let's just use 25% as the number. 75% of something is better than 0% of nothing. So these carriers are coming in and making that, that's part of their sales pitch. And they're encouraging a lot of our coastal carriers or carriers that are writing policies on the coast. They are using that to their advantage, and the individuals, whether or not they get a grant through our program or not, to your point, they will have the certificate. If they go through the process and they pay this out of their own pocket, as soon as they go to their carrier, and the carriers are just different based on their risk, based on how big, and all that's, I wish it was a defined number. There is a minimum, and the good thing for the people of our coastal communities is there are some companies that go a lot higher than the minimum. So that's a really good deal.
The other thing that is curious to me. In Georgia, we don't require licensing of roofers. So tell me how your contractors are certified and your evaluators are certified.
Yes, ma'am. The IBHS, and I will tell you, and I know you guys are very busy. You can go to YouTube and look up IBHS. They are an unbelievable facility. They have a facility in South Carolina where they come up with they have a big, huge facility, and they basically blow houses away with wind. They have hail guns. They have fire cannons. They have all these things. So they're kind of on the forefront of the research. So for them, the evaluators are kind of under their control, right? The evaluators have to go all their certifications. They have to be able to look at houses and evaluate them properly based on the standards that IBHS gives to them. And very similar to the contractors. Number one, they have to be licensed contractors in Alabama. Number two, there are hours of training videos that they have to watch and tests taken that IBHS gives those contractors, and they have to be certified to work on our program. Not all roofers in Alabama, probably are, and I heard some of the stormtroopers, we do fight those as well. But to work on our program, you have to be licensed and certified through IBHS.
So when I heard you say that you approve all the invoices. So when the invoices come in, those certifications have to come along with that. Is that the
Yes,
understanding?
ma'am. We maintain those certifications in our office. Yes, ma'am.
The other thing that was puzzling to me is once you've opened it up statewide, what is the percentage of inland properties as opposed to coastal properties taking advantage of the program, or do you even look at that?
Oh, no, we have done roughly 25% of the homes on the coast are now fortified. Now that's through, like I mentioned, that big number of 55,000.
Mm-hmm.
So those numbers are really strong on the coast. We have building codes that we've adopted in Alabama for Mobile and Baldwin counties. For all new construction, they have to be to the fortified standard, which is unbelievable, which is really helping us. But as of last count, and this was done earlier in the year, of the 9,500 that we have done in the state, over 2,700 are north of Montgomery. So Montgomery is kind of in the middle of the state, as you guys know. So we're pretty proud of that number, and we're continuing to push north as we can.
And one final question, Mr. Chairman. Are you all encountering any fraud from contractors who are presenting themselves to be certified and doing the work and people not being able to get the discounts?
I would love to tell you, no, ma'am, that we don't, but we do. And fortunately for us, the State Fire Marshal's office is also housed within the Department of Insurance under our insurance commissioner. We do have a few cases on occasion, but they are handled very expeditiously because this program is so popular with our constituents in Alabama, our governor, our legislators on both sides of the aisle. We handle those very, very fast.
Thank you. Thank you, Mr. Chairman.
Yes, ma'am.
Thank you so much for your time. And if we have any further questions, I assume we could email you or call you if that would be.
Absolutely. Michael has all of my contact information. So yes, anytime.
Well, thank you for taking time with us today. And we appreciate your help. Have a good
Yes,
day.
sir. And War Eagle.
I go Dogs. Well, committee, it started out kind of slow, but we got a lot of information to process, and I appreciate y'all coming today, and Chair Lady Taylor for letting me have the mic today. We've got some work to do, and let's see what we can come up with. And thank y'all for spending time. And our last presenter canceled, and I think this is all we're going to hear. So if y'all have any other ideas, please let us know. But without further ado, I'd like to adjourn this meeting. Thank you.